Hi, this is Joe Elsasser, President and founder of Covisum and also a practicing financial advisor. And welcome to another FinPlan Friday. You know, April is Medicaid Awareness Month, and though I doubt many of you are out talking about Medicaid day in and day out, it really is an important topic for those of us who work with mass affluent, upper middle income people in retirement transition and beyond. And the reason is because Medicaid is actually the largest payer of long-term care in this country. And that's a conversation we all need to be having with our clients. Now, the fact is, long-term care planning is not really about paying for care. It's about protecting a community spouse or a well spouse, the one who doesn't have the care need. Because in most couples, and this is particularly relevant for planning for married couples, but also for the oldest child, who is the one who's providing support if a spouse isn't available to provide support. For most couples, they're going to take care of each other for as long as possible. And in that process, their lifestyle is going to change. So you see a couple of big myths out there. Myth number one is the myth of self-insurance. For middle-income people, self-insurance is not possible. Instead, what happens is they take care of each other for as long as possible to the point of exhaustion. And that's why you see spouses who are caregivers over significant care events dramatically reduce their own life expectancy in the process. It's really the fear of bringing in outside help, or potentially the shame of bringing in outside help, of saying, I'm not capable of doing this. That's not really the question, but that's the feeling. Where when you've planned in advance, you know exactly what assets are earmarked in order to take care of the spouse so as not to impoverish or deplete the well spouse. So that's this first myth, is the myth of self-insurance. The second myth is the myth of the cost of care. You know, you will hear so frequently from people out there, from consumers, that long-term care insurance is just too expensive. And the reason people think it's expensive is because so many agents are out pushing policies that are based on the entire cost of care. And that is really not at all the way to think about it. In the same way that if you're considering life insurance for a young family, you're going to think about how much gap is there between the assets they will have coming in and the obligations they'll need to meet. That's the same way we should be thinking about long-term care. The fact is, when one person in a household needs care, the other still has income, the other still has assets, and the lifestyle will have probably reduced pretty significantly from when they were both in a go-go position. And so really what we need to be thinking about is just the gap between their then current lifestyle and how much income they have coming in. And that's how you target a long-term care policy to meet the need. And if you're doing that, then the policies really aren't nearly as expensive. Now, the final consideration is this coordination with Medicaid. At the point that partnership policies became a reality across the vast majority of states, you really have an opportunity to protect the community spouse, or to protect the well spouse. For example, here in Nebraska, a well spouse is able to keep about $130,000 worth of assets. Now, that's not a lot if the well spouse has a lot of potential retirement left. And so what a long-term care partnership policy allows a household to do is protect assets for a well, or maybe more importantly, a surviving spouse after a care need. So those are really the key considerations in Medicaid Awareness Month, is to really think about those clients who are at risk from a care need of longer than average duration, and think about how they will pay for care, but think about how to protect that community spouse. And then recognize that partnership policies have really kind of changed the game and create an opportunity to protect a well spouse at a reasonable cost, because you should only be targeting the gap, not the entire cost of care. That's another FinPlan Friday. Thanks for joining us today.